significant change that is taking place because of generative AI.
Do you think American companies will slowly start loosening the purse strings?
Interest rate cuts having started in the US and globally. Today, the gap between credit growth and deposit growth has narrowed, which means the pressure that we were seeing on cost of deposits. Consumption, as you rightly pointed out, is a very important sector from a GDP perspective. Now we have the wedding season, which means that hopefully second half of the year should be.
Hello and welcome to today's sector update video. Today we will be talking about three sectors that contribute a big chunk of India's GDP: technology, consumption, and BFSI. The key trends and challenges within each of these sectors. For that, I have with me Shibani Kurian, Fund Manager and Head of Equity Research with Kotak Mahindra Asset Management Company Limited. Hi Shibani, thank you so much for joining us. Let's start off by talking about technology, a sector that has had a rough couple of months but is slowly turning the corner, at least for the last 2 quarters. What's your take, especially considering that we are seeing an improvement in the US economy? Do you think American companies will slowly start loosening the purse strings?
So technology is all pervasive. It's in all parts of our lives, and all businesses, products, services use technology in various forms. There is also a significant change that is taking place because of generative AI. The good part is a lot of our IT services players are also building capabilities to address this huge opportunity that is coming because of Gen AI. So that's the structural part of it. The second part of the equation is what you referred to. Last couple of years, we saw many of the global companies pull back on discretionary tech spend. Now, with interest rate cuts having started in the US and globally, and also some degree of macro stability coming back, it's possible that some of this tech spend, which is discretionary in nature, which was deferred, comes back on the plate. And that in turn leads to growth coming back for the sector as a whole. Now, if you look at the sector, the companies in our Indian universe, these are well-run companies. They have very high return ratios, they are cash flow generating, and they return cash back to the shareholder. Now, in terms of valuations, the large cap tech space trades at similar kind of multiples in terms of their long-term history as the broader market as far as premiums go. So valuations are fairly comfortable. And this is a sector we believe that as growth comes back, the opportunity set is fairly large.
Another sector that's an extremely important one in India has been showing a lot of promise for the last many years is BFSI. However, this is a very wide umbrella with lots of subcategories. What's your outlook on this and how does one look at investing in this sector?
So absolutely. So BFSI is a very, very diverse sector. We've also seen that different parts of the sector perform differently at points in time. So obviously, it's not a homogeneous sector. So when you look at the banking space, it's gone through its own challenges and headwinds. Deposit growth was slower than credit growth, leading to pressure on cost of deposits. And now at the margin, we've seen some amount of asset quality pressure, especially where unsecured loans or microfinance goes. However, when you look at on the other side, there are tailwinds as well. Today, the gap between credit growth and deposit growth has narrowed, which means the pressure that we were seeing on cost of deposits should stabilize. This is a sector, again, where specifically the large private banks have seen significant expansion in return ratios over the last 5-year period. These are well-capitalized banks, which means that today they don't really need to come to the market to raise fresh capital. So that's a positive. More importantly, from a valuation perspective, if you look at the sector, both the large private banks as well as some of the large public sector banks are trading at valuations which are below their long-term average history as compared to the market, which is trading at a significant premium. Hence, over a slightly longer term period, risk-reward does appear to be favorable.
And then there's, of course, the consumption basket. Much and more has been said about India's favorable demographics, our increasing per capita incomes. But for consumption, we've seen what we call as a K-shaped recovery. Do you see an improvement in the outlook over there?
So consumption has been a mixed bag. Ever since COVID, we've seen various differences in terms of how consumption has played out. Premium has done well, mass consumption has not done well, urban has been performing better than rural. But at the margin, things seem to be turning the corner. We are now seeing signs of pickup in rural consumption, and some of the anecdotal evidence and data points seem to suggest so. However, it's still a wait and watch. We've just gone through the festive season. Again, the trends were somewhat mixed. Initial part of the season was muted and then it picked up towards the end. You saw growth coming through in, for instance, two-wheelers, passenger vehicles, consumer durables, and this trend needs to be monitored. Now we have the wedding season, which means that hopefully second half of the year should be better than the first half. But again, we will wait and watch. Consumption, as you rightly pointed out, is a very important sector from a GDP perspective. Private consumption expenditure is almost 60% of GDP. So structurally, the trend and the opportunity set is very large. However, we will have to closely monitor how the pickup pans out for the second half of the year.
Okay, Shibani, clearly lots to watch out for in each of these sectors. Thank you so much for the guidance that you've given us as to how we can navigate these three sectors in India.
Thank you so much. Stay healthy, stay invested.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.